Alright guys, welcome back to Accounting 101. In this lesson we are going to look at analyzing our transactions. And so remember we had talked about a little bit about analyzing before, and with analyzing we are looking at which accounts are we going to use. Are they being increased? Are they being decreased? Really, what is going on with the different accounts? With this particular worksheet, I am first going to start by analyzing the accounts in this video, and in the next video, after we have everything analyzed, I am going to go through and we will journalize those entries. So for the first thing that we have listed here, a business is started by receiving $150,000 cash from the owner. So what we are looking at in the analysis portion is we have to look at what counts are involved here. And the first account that is involved that we see is going to be that cash account. So you see it actually says cash there. So we will take and we will be using the cash account for this particular entry. Now the other thing that we see is that the business has been started. We're receiving money from the owner. Now remember, receiving money from the owner, that is a capital contribution. So the account that we would be using for receiving money from the owner would be capital. The next part of looking at the analysis, so we have to figure out what type of account we're looking at. So with cash, we know that we are looking at an asset account. That is a resource of the company. And then the capital is part of, the owner's equity. It actually is, the capital part of owner's equity. The other thing we look at here is what is happening to my cash. Well, my cash balance will be increasing when the owner puts money in the business. That means that it also increases that capital account. And so that is what we're going to be looking at when we analyze this particular account. Some other things that we look at here for number 2, a business purchases land for $100,000 in cash. So in this particular one, cash is involved. We have to look at it. Cash is an asset, and what is happening to my cash? Well, that balance is going to be going down. It will be decreasing. Now, why is my cash decreasing? What's happening here? Well, we purchased land. And so land is going to be our other account that we use in this particular transaction. Land will be increasing here, and it is an asset account. So it's an asset account, and our land value will be going up. For the next entry, for number 3, it says a business purchased supplies for $200 on account. Now when you see the words on account, that is either going to be an accounts receivable item or it's going to be an accounts payable item. So when you see on account, I need you to think accounts receivable or accounts payable. And with this, we need to look at what's going on and to find out which one it is going to be. In this particular case, we are making a purchase. And so the account that we are going to use here is going to be the accounts payable account. Our P's will stay together. If it were a revenue item, then it would be the accounts receivable. In this case, it is accounts payable. Accounts payable is a liability account, and our liability will be increasing. The amount of money that we owe will be increasing. The other account that we're going to use here, we do have this debt. Why do we have this debt? Because we have purchased supplies. And so the other account we would be using here would be our supplies account. The supplies account is an asset account, and that account will actually be going up or increasing. The next entry, number 4, that we have on our worksheet, a business performs services to its customers and collects $900 in cash. And even if it didn't say cash there, if they collected $900, that means cash. So cash is going to be one of the accounts that we will use in this particular transaction. Cash is an asset and it will be increasing. When we look at the other account, why are we receiving this cash? Well, if we look at this, what we find is that we have performed a service. Now, when we perform a service, the account that we would be using would be a revenue account. So it could be something like service revenue. And so in this case, we do have service revenue. This is a revenue account, and the revenue would be increasing. So those are some of the things that we have to do as far as analyzing these accounts. For number 5, a business pays a salary expense of $4,000 in cash. So again, we're paying an expense. Cash is what we pay it with. Cash is an asset account, and this is going to be decreasing because when we pay things, our cash goes down. The other thing we have here is, what are we paying? Well, we are paying salary. So our other account would be salary expense, and that is going to be increasing, and that is an expense account. The last one that we have for this particular worksheet is a business performs services to its customers for $3,500 on account. Again, we see that on account. We also see the words performs services. So we do know that that is a revenue item. So when we look at this, remember, on account means accounts payable, or it could mean accounts receivable. In this case, this is a revenue item, so we are going to use accounts receivable. So we will have accounts receivable. Accounts receivable is an asset, and this asset will be increasing. And the other side of it, perform services, is a revenue account, and the revenue account that we choose to use here is going to be service revenue. Again, it's a revenue account, and it will be increasing. So this is really how you go in and you analyze the different accounts as you are looking to see what accounts are being affected by the transaction, what type or what classification the account has, and is it an increase or is it a decrease to the actual account.